Hi, and welcome back to Cheeky Crypto Podcast. My name's Chris, and it's fantastic to have you back with us for another podcast video. And in today's podcast, I want to touch on a few different subjects. I want to touch on Ethereum. I want to touch on the SEC, how some of those movements of substantial amounts of ETH can be linked back to the evil regulator, the SEC, in my opinion. And have the SEC been rumbled with their, I guess, ill faith kind of games that they've got going on that are really plaguing the cryptocurrency space in a hurtful and I guess dangerous way, and how it's negatively impacting investors. The very investors, their mission statement suggests that they're here to protect. So we're going to dig into all of that. You know me, I think the SEC, particularly Gary Gensler, is absolute scum and, have let investors down. And I think actually there should be some punishment that goes their way, particularly with Gary Gensler and the leadership team of the SEC, for the amount of failures that have happened under their watch. And, there seems to be some clear evidence that demonstrates that they're aware of everything that they're doing and how hurtful it can be to the crypto industry. If you enjoy this sort of content, mash up the like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video. Right, let's get down to the desktop. So really important stuff that I want to cover off. Kraken to withdraw $1.17 billion of staked ETH in line with the SEC ruling and settlement, obviously. So look, why is this important? What are they going to do with that crypto? Are they just going to hold it? Are they going to get rid of it? Really interesting to see what actually unfolds here. And look, could be concerning for ETH. Now, I'm not talking about this and highlighting it because I think ETH is going to pull back or anything like that. There is arguments going on whether we're going to see a big pullback for ETH because obviously it's all unlocked now and people can just take their ETH and sell it, and many people will do that. But there is a counter argument that it's unlocked and you can unlock it now, and more people are going to put their ETH into it and lock it up. So there's two arguments going on, and I don't really give a shit which way it goes, to be quite honest. Look, I think ETH will go up in value. I think that it's a potential opportunity over time. But with that said, I think there are better protocols out there that have more potential gains over time. For example, Cardano, I think it's a better technology, and I think it will outperform Ethereum. And I'm just going to put that out there. But the reason why I bring this up is just look at the impact that the SEC has on the space. Just look at this. $1.17 billion worth of ETH. What are they going to do with it? Unstaked or going to be unstaked. The SEC are creating some big waves in the space. I don't care what people say. This is, in my eyes, not positive. But let me know your thoughts and opinions in the comments below. We'll also look at the Ripple legal team. They strike back in response to the SEC letter. And basically, they filed a response to the SEC in a recent letter, supplement authority in support of a motion for summary judgment in the ongoing case against, obviously, the Ripple company. So, look, it's an interesting one in the respect that, there's a lot going on. And I like to see the fact that they're coming back with something that is, I guess combat what they're talking about. So the Ripple team has pointed out the Commonwealth case rejected a fair notice defense on summary judgment, even when the SEC had been aware of the practices in question for over 2 decades and had not adopted rules addressing the specific conduct. This, they argue, strengthens their argument that the SEC has not provided adequate notice to Ripple Labs regarding the disclosure obligations. So it continues. But I think the SEC, as articulated here, SEC getting wrecked. Basically, there's an abundance of evidence that the SEC not only aware of the widespread regulatory confusion, but also help to basically give vague guidance that is different from the Howey test. So you've got here, SEC doubles down on Hinman testimony according to legal analysis. Again here, the Hinman standard, a potential path forward for token offerings. Again here, digital asset transactions when Howey met Gary. And again, there's just lots and lots of stuff here that does indicate it. Can digital assets offset as a security become over time something other than security? And there's all this stuff that's been put out that really is contradicting what is going on in the Ripple case. So look, they are fully aware of what they're doing. They're playing a game, and the game is to basically part as many people with their money, and the rich will go on to do really well. And what I mean by this is there are lots of corrupt individuals within governments, within regulatory bodies, within politics, that basically are lobbying and making sure that their investments perform the best. Why is ETH not a security and Cardano is? I mean, the foundation has been dumping ETH on its own community to pay for the upgrades and everything that needs to happen on ETH to get it to where it needs to be. So there's arguments there that it's a security as well. If you're going to label Ripple as a security, for example, and XRP as a security, then I think you've got to kind of be doing a blanket sort of coverage. But that's not the way that this is working. And why? Because like I say, the people that have the power are the people that are invested in some of these projects that have got to do well. And that's what it's all about. It's a unfair, rigged platform or game that we're all operating in. Ripple launches liquidity hub for businesses to bridge the crypto liquidity gap. The liquidity hub aims to offer a pool of liquidity to businesses in addition to Ripple's popular cross-border payment service called on-demand liquidity. So again, Ripple, even with this lawsuit hanging over their heads, are still pushing forward and looking to deliver. I really do rate this project, being invested in it this whole time. I was buying when everybody was selling, because I think that the truth is always what comes out in the end. And I think that this project has been working hard, tirelessly, and trying to play within the borders of rules that have been put out there. And look, I will argue that I think this is a project that is already going to be earmarked for huge potential and adoption in the future. So we've got hacker robs crypto exchange Bitrue of 23 million in ETH, SHIB, and other assets. So look, just one to be aware of. Obviously, Nick and myself, we have an affiliate link where we get a little bit of a kickback from Ledger in the description of this video. Remember, we talk about risk management. We have cheekyschool.com where we highlight risk management courses and stuff like that you can do in order to make sure that you have the least amount of risk possible and at least understand the risks that you're getting into when investing or keeping your crypto on exchanges. Why use Ledger? It removes the third-party risk of an exchange being hacked or a pool being drained or something along those lines. You own the keys to your crypto and nobody can take that away from you. So definitely check out Ledger. Link is in the description. But I wanted to really bring this up because everybody seems to be comfortable with exchanges again, but there is risk and I want people to be aware of that. Moving on, Twitter partners with eToro to let users trade stocks, crypto, as Musk pushes the app into finance. And I believe he wants this to be one of the biggest apps out there in order for I guess in the investment sector. So super excited, super bullish for crypto. Again, I think there's a few iterations of updates that would be required for this to be like something that's mainstream. I just think about people that like I'm friends with, and my family are friends with, and my friends are friends with, and none of those guys trade. None of those guys are into crypto, and this change means very, very little unless it's made for mainstream adoption, and it's easy to use and people understand the benefits and all that sort of wonderful stuff. So does it move the needle? Not really. But is it bullish? Yes, it's bullish. Again, it's more adoption, and I love seeing Twitter move forward in a financial sort of landscape in the future. I think that would be fantastic, bearing in mind it's already sort of the app for social crypto updates, I guess. TradeFi remains the counterparty, if I get my words out, of choice for institutional crypto investors, according to the Bank of America. Crypto company collapses create a void in the ecosystem that traditional finance firms may look to fill, according to reports. If I can actually talk properly today. So look, basically the Bank of America are saying that traditional companies, banking sector, are going to be getting into crypto. This is not something that should surprise anybody. But look, does it really change anything? Are the banks more trusted than any other firm in crypto? Probably not. The banks are just as bad when it comes to breaking rules, and look at HSBC, for example, one that I will call out, that's had many fines for not following the right rules, and having issues with cartels using their banks and stuff like that. So look, I'm just going to put all that stuff out there. It's great. It means more people will have the opportunity to get involved in crypto. More crypto products will become more mainstream and all that sort of stuff. This is really bullish stuff. But you've got to kind of see it for what it is as well. You've still got that risk involved in it, no matter how trusted people are saying they are. I hope you enjoyed today's podcast. If you did, mash up that like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.